Coming up today, stocks start the week higher on the back of a blockbuster AI deal. What else is moving out there? The latest from Paul Tudor Jones, more signs of froth, global liquidity set to rise further, and everything else interesting going on out there in finance today. Sit back and relax, guys. Let's go. And a warm welcome back to your favorite finance channel, everybody. Hope you had a great weekend. We've had another big day in the markets. Our portfolio is up huge again. And a massive thanks to everybody who joined our premium services last week and over the weekend. I'm super excited to start this new journey with you all as markets continue to get more interesting by the day. Just looking across the ETF heat map here, big day for semis on the back of the AMD OpenAI deal, which I'll get into soon. And once again for the debasement trade, cryptos and commodities continuing to light up today while we're still seeing bonds come off a little. And once again, mixed breadth across all the sectors. And today is Monday, the 6th of October in the United States. Looking back at the seasonality calendar, typically finished a little higher for the day, which is exactly what we got today. Market continuing to grind on super low volatility, but we're not all that technically overbought in the short term, like we can see in my S&P 500 oscillator and the fear and greed index as well, just having gotten back into the greed zone. Market's just kind of grinding higher, but hasn't really gone vertical yet. And so technically speaking, we should have a positive Q4, the most bullish quarter of the year. And since we're making multiple new all-time highs in October, that's another positive sign that the market should finish the last couple of months of this year higher than where we started. And that rally was once again powered higher today thanks to another big blockbuster AI deal, this time between OpenAI, the maker of ChatGPT, and AMD, known for making cheaper CPU chips, which are still very much needed in data centers. And AMD actually pulled back the last few weeks after OpenAI did a big blockbuster deal with Nvidia. But looks like OpenAI is diversifying their chip suppliers, coming out today announcing a multi-year agreement with AMD for them to provide AI chips with their AMD Instinct GPUs, as ChatGPT cannot simply get enough compute power. Deal also gives OpenAI the option to take a 10% stake in AMD. Very interesting and very close partnership. Though we also heard the guy who represents OpenAI, Sam Altman, who's kind of the poster child for that AI boom now, said today on X he's excited to partner with AMD to use their chips, and the world needs much more compute. And that was a big deal for the market. Huge gap up today. Did sell off a little bit into the close, but still finished up 23% on monster volume. Nvidia actually pulled back a little bit, but the entire semiconductor industry was up 3% today on the back of that news. Once again, helping to light up that AI infrastructure trade. It's really been dominating this last month or two, especially with these Bitcoin miners turning into GPU landlords. Two we've got in our stock picks portfolio, Hive and Iron. We just added Hive a couple of weeks ago. It's already up over 50%. Monster move today, still ripping after hours. And Iron as well, up 14% today. Absolute smoke show with runaway momentum here. And so it seems like AI infrastructure headlines continue to accelerate, especially these last couple of months. Just in September alone, we got some big ones. The $100 billion one with OpenAI and Nvidia, bunch of big American tech investing in the UK after the state visit there. All of them investing more and more so in data centers, some of them even getting more and more into nuclear, and we're seeing this show up in their products as well. One thing I think could be next is monetization, integrating online shopping into AI tools. I think will be the next thing. We're seeing that with GPT instant checkout, and very well could see ads in these chatbots soon. The new Ray-Ban smart glasses from Meta are pretty cool. I don't know the size of that potential market, and I think metaverse is still a way off. And this chart here explains why we've seen a big catch up in leadership and Alphabet Google stock price the last couple of months. Looking at AI traffic share, 6 months ago here in the red, Gemini wasn't all that big, but you can see that's really grown over the last couple of months as Google continues to integrate Gemini throughout their products, now with AI mode and search. But no doubt, GPT is still the absolute dominant player in this market with 3/4 market share. I still think Gemini's got plenty of room to catch up, and Grok as well. Here in the green, they actually score really well on a lot of AI models. They just don't have that bigger mainstream installed consumer base yet, like Alphabet Google does. I think they've got the best monetization capabilities and could very well be the largest company in the world over the next year or two. But these mega cap techs is not the only way to play it. They all need a huge amount of energy, and that affects a lot of industries, entire supply chains. And with a really pro-business government looking to get behind them, we're already starting to see winners emerge, even in the mining space, like MP Materials, most recently Lithium Americas. Another one today, Critical Metals Corp. The government's made it clear they really want to get behind rare earths, the critical minerals needed for all these future technologies. So like I've been saying, expect to see more deals. This could just be the start of dozens of deals over the next couple of years we see coming from the government. And one company I hope is next in line is Idaho Strategic Resources in our stock picks portfolio. Now up about 150%, a huge rip today, 15%, as they have the largest deposit of rare earths in the United States, just yet to be tapped, still quite small at only 500 million market cap. No doubt they're going to need a lot of finance to help unlock all that potential, which again is of strategic national importance. And all that's continuing to help light up the related ETF, REMX. Still quite small, only $1 billion in assets under management. I think a lot of big money has been coming into this. And this is another one in our ETF portfolio. Already up over 6%. Like I've been saying, there's a huge amount of global momentum out there. Got to make hay while the sun's out. And right now the sun is shining bright. Stock picks portfolio also up over 3.5% today, as a number of themes continue to accelerate. One industry I've had my eye on for a few months, hydrogen, and we're starting to see good momentum there as well. Plug Power could be an artificial intelligence play as well. A hydrogen producer and fuel cell company likely to benefit from the tailwind in the huge demand for energy. With green hydrogen still a very nascent industry with a lot of potential in the future, very clean source of energy, and the market really jumping on board some of these names of late. Plug Power, huge rip off a really low base, was barely trading at $2 a share just a month ago. And yes, there is an ETF for that, the Global X Hydrogen ETF. Very, very small, tiny actually, 57 million assets under management, given exposure to 26 different companies in the space. Globally diversified, 59% of the fund in North America. Plug Power, their second biggest position, although it is quite concentrated in its top two positions there, with Bloom Energy being the first. And just going out to the monthly chart on the hydrogen ETF, like a lot of these clean energy funds, they were in a multi-year bear market. They've based out and now they're breaking out. And we've also seen that in the lithium and battery technology ETF as well. Some of the best performing funds over the last couple of months, and solar stocks as well. Definitely some industries to keep an eye on, with clean energy coming back after initially being knocked down on the view that the new admin will hamper their growth. May have got a bit overdone there. Also moving higher today, crypto stocks, as we've got Bitcoin and Ethereum pushing back up towards all-time highs. We're seeing Coinbase really bounce back last week after it was quite flat there for a few months. Did just have a monster quarter, absolutely smoking expectations. So no surprise to see the stock find support and break out here, as Bitcoin did actually make new all-time highs today, 126,000 a coin. And Ethereum looks very likely to do so this week as well. Break out above $5,000 for the first time. Along with the Ethereum treasury companies, one I've got in my long-term portfolio, Bitmine Emergent Technology, with Tom Lee as the chairman. They've got a goal of owning 5% of total ETH supply. And some of these have been recently trading at discounts to their NAV, net asset value. So they could still have a bit further to run. Stock price looking pretty good here. But like I've been saying, what I think could be next, robotics. And here's a good list of different robot stocks according to industry: defense, medical, automation, software, logistics, industrial, professional, and service robots, for which there's only really one stock on the market that offers a consumer-facing robot product servicing multiple industries, Rich Tech Robotics, which they're continuing to roll out in more and more businesses. We just saw their president today, Matt Casella, unveil their new Atom robot, and yet another cafe brand, saying it's just the start of their new initiative to bring robotic barista solutions to universities, hospitals, and airports across the country. And with the leaps and bounds in NVIDIA GPUs, which they're partnered with in their robot program, the chips are allowing more and more real-world usage, and again, they're just going to get cheaper and cheaper as well. And we're seeing companies continue to post about it as well. Just recently, a Call of Duty gaming conference showcasing the Rich Tech Robotic Atom, as a lot of companies like to feature it at their events, as it's always a novelty concept. No doubt still in the early stages, but does have the potential to be rolled out mainstream. And I think that's why we're continuing to see the stock rip. The market getting excited about it. Still doesn't quite have a market cap of 1 billion yet. And you compare that to some of these quantum computing stocks. Barely have any revenue, trading at market caps of 5-10 billion or more. And so that's why I continue to remain long the stock in my long-term account as well. But just moving on to one guy I respect a lot, possibly one of the best traders of all time, hedge fund billionaire Paul Tudor Jones. Says the stage is set for a massive rally before the bull market reaches a blow-off top. He thinks all the ingredients are in place, with the current setup reminding him of 1999, the last stages of the bull market. Internet boom, the Nasdaq doubled in just a few months. Saying if it looks like a duck and quacks like a duck, it's probably not a chicken. Saying the greatest price appreciation occurs during the 12 months leading to the top. And putting it really eloquently, saying if you don't play it, you're missing out on the juice, but if you do play it, you have to have really happy feet because there will be a bad end to it. And so that is really a good point. There's nothing wrong with, like I said, making hay while the sun's out, riding the trend, but keep in mind what will eventually come. You don't want to get too over leveraged, too overexposed. You want to have clear exit strategies. Look for clues that the market environment has shifted, stay well diversified, and be prepared for crazy to get crazier than a eventually the party will stop, just that no one knows when. Because we do have the CAPE ratio, a measure of long-term stock market valuation, at the second highest level from the late 90s. I think this AI bubble could very well make a new record. May top out above 50, who knows, even 60. Because like Paul Tudor Jones said, there's actually potential for it to go a lot further than the late 90s. There's much more ammo there this time. And so no doubt this is Wall Street's great debate at the moment, just like it was back in 1998. How much longer can the AI bubble last? According to Tom Lee, they're watching for signs of excess exuberance, which characterized the 1999 period, but they're not seeing any signs yet. I think we are seeing some signs. For example, a massive rally in non-profitable tech companies these last few months. No doubt it could keep going a lot further. But another sign of froth that you can see out there is when celebrities that have no business getting into the latest hot thing try to get into it. We just heard Sean P. Diddy Combs, now a convicted criminal in jail where he belongs, says he's looking at starting an AI platform after he gets out of jail, along with his convicted fraudster, Miles Gale, Chinese businessman. But since he's been sentenced for 4 years, it may all be over and done with by the time Diddy gets out and wants to start an AI platform. And good luck to his investors if they find any. So I'd say that's a sign of the times, but also quantum computing, easily the most overvalued sector out there, which has given us some good memes like this. The average quantum computing company headquarters, using the image from the famous movie Wolf of Wall Street, which Jordan Belfort was promoting these penny stocks as being legit in his boiler room operation. One pictured here, Aerotine, which is not all that far from reality when it comes to these quantum computing stock. You're literally looking at the headquarters of these companies. Like I said, barely any revenue, but they got market caps well into the billions. There's IonQ, there's Rigetti, which looks like I might actually have a bigger office than them. And there's quantum computing. Again, just looks like a bit of rented office space. But like I said, these stocks are huge, monster volume. No telling how high they can go, but I can almost guarantee you at some point they will all come crashing down. Many of them will disappear, and a lot of people will be left holding the bag. And so how you prevent that from happening to you is if you're long the stock, that's fine. Follow the trend, just like I do on my stock picks portfolio. I have my own unique trailing stop system, which allows profits to ride. But when the uptrend eventually breaks, that's when you get out. You don't hang on and hope. You don't guess what's coming next. You simply stick to the rules. And so trend following works, but you have to be unemotional about it. And that's because nobody knows for sure how long it can go on for. For every sign of froth we've got out there, we've got another sign that we could only be halfway through it. The investment in AI as a percentage of GDP still hasn't quite reached what the internet did back in 2000. And this could very well go further as well. And anybody long the S&P 500 may not know it, but that is a leveraged bet on the AI boom as well. No doubt it's been working well, but a lot of people may not realize that almost half of the S&P 500 is directly exposed to AI now. And for good reason. The United States is without a doubt the AI leader. It's only got real competition from China, which is still relying on NVIDIA chips at this stage. The world currently has almost 12,000 data centers, almost half of them in the States. And again, with a very pro-business government looking to not only retain, but accelerate that lead. But just keep in mind, even the so-called smart money, Wall Street, the best and the brightest in the business can get it massively wrong. We've seen that time and time again. Here's a research note from Morgan Stanley. On June 2008, Lehman Brothers, bruised, not broken, and poised for profitability, with them literally going bankrupt just a couple of months later. One of the largest, oldest investment banks on Wall Street getting taken to the cleaners. Again from Goldman Sachs, on April 2000, we recommend adding to positions in leading internet companies in each sector. Fundamentals remain strong going into Q2, and we remain comfortable with relative sector growth. Sector rotation creates potential buying opportunities. Invest in the leaders. AOL, Yahoo, eBay. They put out this note literally the month the market topped. The stocks they recommended went down more than 90% over the next 2 years. Again, you can try and guess what's going to happen, or you can have hard and simple rules to tell you what to do. And those rules can rotate your capital into better opportunities, just like we saw in 2000. There was a massive gap between small cap and large cap valuation. Small caps significantly outperformed over the next 10 years. And now we've got a very similar setup. Small caps are at very reasonable valuations, with a monster gap between large caps. I think will no doubt close at some point over the next couple of years. And so whilst I do have a few non-profitable, high beta stocks in my stock picks portfolio, I always keep it well balanced, and I'm being careful not to add too many. I do have defensive stocks in there as well. I'm not just completely leveraged to AI and tech, but rather have profitable companies from all around the world. And like I said, just let the trends determine your decisions. Because even the hottest stocks can get knocked over by surprise news. And we just saw that again today with App11, only after recently being added to the S&P 500 index, really ripped up there, getting slammed today on an SEC report that alleges that App11 violated platform partners' service agreements and that the ads they create could violate Apple's app stores, which the CEO has pushed back and say that that's false. But as soon as that hit the wires, the algos unleashed on it, literally the same second. You can see that here in the 5-minute chart, finishing the regular session down over 14%. And this is a pretty big company, 200 billion market cap. So it'll be interesting to see how that unfolds because it can turn quite messy for some time. We saw a similar thing with Supermicro last year. After a monster rip, there was a bunch of accounting and fraud allegations. The stock lost trend, then actually had a monster drawdown. And it's kind of just been consolidating ever since. Moving on, looks like we are going to get a prolonged US government shutdown. Polymarket now putting the odds that it will go on. I think it could very well drag out into November and potentially set a new record. At this stage, the market doesn't seem to care as it doesn't really have an effect on business, with the admin using it as an opportunity to cut the government down in size. We also saw a big rally today in Japanese market after they just elected a new leader, the first female Prime Minister of Japan, and investors are liking that because she has pledged more stimulus, more spending, and also pressuring the central bank to pull back on tightening monetary policy and increasing rates. And we can see that in a sizable move up in long-dated JGBs, Japanese government bonds, the 30-year, bumping up, along with the Japan ETF trading in New York as well. Similar move in French bonds, moving higher today after their Prime Minister just resigned, and could very well bring the end to their President Emmanuel Macron, which I think if Europe's going to really turn around, they have to get rid of him. He's been an absolute detriment economically and culturally across Europe, as I think the tide may be finally turning over there in England as well, as people are starting to wake up to the reality of where the current policies have led them and are leading them. And I know Ray Dalio is a controversial figure. He is quite pessimistic, always talking about the wealth inequality gap when he actually contributes to it by hoarding extreme wealth. But he's right about the debt situation, not only in the States, but around the world. We're in a period now of fiscal dominance. Countries are trying to spend their way out of debt, debasement of currencies, inflation, trying to outgrow the pace of debt. Might work, it might not, but that's adding to a big rise in global liquidity. And like I said, it just forces you to own asset. And it's probably why non-fiat assets like gold continue to rip, as there's only a finite supply of gold and Bitcoin and stocks as well, actually a decreasing supply of stocks, all priced in fiat currency for which there's an infinite supply. Add on top of that de-dollarization, and for sure the fundamentals are certainly there for gold, even as technically stretched as it is. That's why I've been preferring gold and silver miners of late, which have been performing really well. Just moving on, taking a look at Tesla, having a nice bounce back here today after getting sold off on their delivery numbers. You can sometimes see that. Buy the rumor, sell the news. Came through with a record beat, almost 500,000 electric vehicles delivered in the past quarter. Stock up a bit over 5% today, literally just within a stone's throw of all-time highs, above 488, with a number of catalysts to talk about. Potentially cheaper Model Y, already the best-selling car in the world, head and shoulders above the industry. Much of the legacy makers struggle to make any money selling electric vehicles. Tesla's been doing it for several years now. But also, Elon just posted a cool video over the weekend of the Tesla optimist bot learning Kung Fu, and I'll play this short clip for you. Just check it out for yourself. So you can see its movements are getting quite fluid, more and more human-like. It's definitely coming a long way. And again, I think this will be the big story of 2026. Robots, led by Optimus Bot, potentially going on sale later next, likely causing a massive rally across the entire robotics industry as investors get excited, going into this groundbreaking and pivotal product launch. And it might sound crazy, but we very well could see Optimus Bots on Mars in the next 10 to 20 years, taken there by the Starship, building the first human bases on Mars. And so all these new technologies, like humanoids, space exploration, well, we're having a good rally and bull market now. No doubt there'll be a bear market in there some point, but bear markets usually only last a year or two. Then we very well could be back to the good times once valuations have caught their breath, and the American-led technology boom could have decades left in it. Because I do honestly think we're going into the golden period for Tesla. All these new products, helping to evolve it from an electric vehicle company into a robots company. Also getting some dramatic improvements with Elon's XAI and their flagship product Grok, now delivering cinematic level video quality. With Elon even saying today that Grok will make a movie that is at least watchable before the end of next year and really good movies in 2027. Kind of exciting and scary. As a content creator myself, I do wonder what happens when AI can create just as good, if not better, videos than we all can. This is something a lot of big YouTubers are talking about as well. Human created content could become a thing of the past, or at least very niche in a few years, 5 years or so. Of course, people will always connect with other people, but for most things, if you can get a better product, if you can get a cheaper product, most people won't care if it's human or AI made, just like what we're already seeing with robo-taxis. You can get from point A to point B for a quarter of the cost of a traditional taxi. 95% of people will take the cheapest option. That's just the reality. And XAI as well, scaling up at light speed, wanting to have the most compute power in the world. Going to spend another $18 billion to get another 300,000 NVIDIA GPUs for their Colossus 2, the world's first gigawatt AI supercluster. And so XAI, along with OpenAI, some of the biggest companies in the world, and they're not even on the stock market yet. No doubt interesting times as the world accelerates to full artificial general intelligence, AGI, when in the next couple of years, robots and AI are likely to overtake humans in their capabilities. And just wrapping it up, taking a look at the VIX, still bumping along here, really low volatility, 16.3. Realized volatility in the market's even lower, currently around 8 or 9%. Same with bond market volatility, continuing to trend down. 2-year government yield still tracking sideways, 3.59. Dollars holding ground, and plenty of commodities like uranium continuing to show momentum here. As once again, things are lighting up across the board. No doubt our portfolios are enjoying that. Please keep in mind, at some point around the corner, there will be a sharp and fast pullback, so be prepared for that. Otherwise, as usual, we'll keep riding the trends, and like I said, make hay while the sun's out. Thanks very much for tuning in to the Daily Market Review, and again, a massive thank you to everybody who jumped on board my new ETF portfolio service last week and over the weekend. It's a long-term investment for me, and I think this is a great time to have started it, and I am looking forward to tackling the inevitable correction in markets when it does happen. But for the here and now, things are on fire, as we've got multiple themes all around the world continuing to accelerate. So again, a big thanks to you guys. I really appreciate you placing your faith and trust in me. I take that responsibility seriously, and you have my word that I'm going to do my best to help us all succeed going forward. That's all for today. My name's Jared, and I'll be back again this time tomorrow. Cheers.